Putin just got humiliated. China cut off the cash and Russia is imploding. For years, Moscow bragged about its alliance with Beijing, but that so-called friendship just exploded in Putin's face. The money pipeline is dry, the deals are dead, and the Russian economy is crashing. This isn't just a setback, it's an economic death sentence. And the worst part, the clock is ticking, and Putin knows he has no way out. The backroom deals have finally unraveled. Beijing's pressure is tightening, and the cash lifeline has snapped shut. With every passing day, Russia edges closer to an economic collapse that is going to shake the entire world. When the West slammed Russia with wave after wave of sanctions, Moscow needed a lifeline fast, and that lifeline was China. Beijing stepped in as the main buyer of Russian oil, the main supplier of crucial tech and electronics, and even the biggest player in currency swaps that kept the ruble from crashing. Think about it. Without Chinese imports, Russian factories would have gone silent months ago. Without Chinese demand for cheap oil, Moscow's war chest would have dried up much faster. For the last 2 years, China has basically been Russia's bank, its gas station, and its hardware store all rolled into one. But that dependency means Putin's economy is now chained to Beijing's mood swings. And those mood swings are starting to show. Lately, China's been playing it a lot cooler with Moscow. Reports show Russian imports from China actually dropped by almost 7% earlier this year. Not the kind of number you'd expect if Beijing was doubling down on support. Chinese banks have also been skittish, quietly pulling back from risky transactions that might trigger US secondary sanctions.
So based on that, we're going to be doing secondary tariffs if we don't have a deal in 50 days. It's very simple.
There's even talk that Beijing is starting to cap some financial flows, making it harder for Russian companies to borrow or trade as freely as before. It's not a total cutoff. Trade is still huge, but the slowdown is like a warning shot. And if China's grip keeps tightening, Russia's so-called war economy could start cracking at the seams way faster than anyone predicted. When sanctions cut off Russia from the dollar and euro, Moscow pivoted. The answer? Barter-style trade and big yuan or ruble deals with Beijing. Instead of hard currency, Russia started swapping oil, gas, and raw materials for Chinese cars, electronics, and machine parts. On paper, it looked like a clever workaround.
Вот за предыдущий период рост товарооборота составил 32%.
But here's the catch. Yuan isn't the dollar. It doesn't flow freely, it's tightly controlled, and Beijing decides the rules. Russian businesses complain that they're sitting on mountains of yuan they can't always use, and when Chinese banks hesitate, those deals freeze up fast. So, is this a real lifeline, or just a shaky band-aid? Right now, it's looking more like a risky substitution than a solid partnership. If Beijing pulls the plug, Russia doesn't just lose cash, it loses its only major financial bridge to the outside world. What do you think? Is this going to get worse? Comment below, and while you're at it, kindly like this video and subscribe to our channel for more interesting videos like this one. And speaking of lifelines, there's one pillar propping up Putin's entire war chest, and the cracks in it are starting to widen. Russia's oil sales was used to bankroll the whole war machine, but falling global prices and tougher discounts have slashed those profits hard. Every $10 drop in oil prices cost Russia billions, and right now, it's bleeding cash faster than it could print rubles. In fact, India and China, Russia's biggest buyers, are now calling the shots. They demand steep discounts, sometimes paying $15 or even $20 less per barrel compared to global benchmarks. That means Russia sells more barrels but makes less money. To make matters worse, Moscow is losing market share in Europe permanently. Once pipelines shut and contracts vanish, those customers don't come back. Analysts warn Russia could lose hundreds of billions in future revenue, money it simply can't replace. Russia's economy isn't just getting squeezed from the outside, it's also cracking from within. Debt is climbing, inflation is chewing through family budgets, and interest rates are sky high. Right now, borrowing costs in Russia hover around 16%, levels that would make Western economies collapse overnight.
Мы хорошо знаем, видим и основные риски для социально-экономического развития. Недавно разговаривали.
That means businesses can't afford to expand, families can't afford loans, and everyday goods cost more each week. Inflation is officially around 8 to 10%, but Russians at the supermarket will tell you it feels way higher. Prices for basics like eggs, sugar, and fuel are climbing far faster than wages. The Kremlin can spin all the propaganda it wants, but numbers don't lie. This is the kind of pressure cooker that squeezes ordinary people first. And when that squeeze gets tighter, the government has to scramble for desperate fixes. So how is Moscow plugging the holes? In short, short-term tricks with long-term pain. The government is borrowing more, leaning heavily on domestic banks that are basically forced to buy Russian bonds, and it's also quietly printing money, which only fuels the inflation fire. On top of that, Russia keeps dipping into its sovereign wealth reserves, the rainy day fund that was supposed to last decades. But with war costs burning through $300 million a day, that fund is shrinking fast. Experts warn that if spending continues at this pace, reserves could run dangerously low within just a few years. Think about it. Borrowing, printing, draining reserves, it's like juggling flaming torches while standing on quicksand. Might look steady for a moment, but the crash is inevitable. And even if Russia buys itself time, the global ripple effects of those choices could be massive. So, is Russia really on the verge of collapse? Economists say that it's not a question of if, but when. Right now, Russia is burning cash, but with failing oil income, shrinking trade, and rising debt, the math doesn't add up. Some analysts project Russia's GDP growth will flatline this year and may even dip into recession by the next. Others warn that if sanctions tighten further, Moscow could face a financial crisis within 2 to 3 years.
The Russian economy minister said during his appearance at the forum that he doesn't predict a recession for Russia, but that it's on the verge of going into one.
Even Russia's own central bank admits it's fighting a losing battle against inflation and currency weakness. The ruble has already slid, hitting painful lows that force the government to keep raising rates. Every fix only buys a little more time. The scary part, collapses don't often come gradually. They hit suddenly, like a dam breaking, and when it happens, it won't just be Russia that feels it. If Russia stumbles, the aftershocks will echo worldwide. Sanctions already rattled global markets, but a deeper collapse could hit energy prices, raw materials, and even food supplies. Remember, Russia is one of the biggest exporters of oil, gas, wheat, and fertilizer. A breakdown in those exports could send shockwaves through Europe, Asia, and beyond. On the flip side, sanctions have already reshaped trade. Europe has largely cut Russia out, while India and China have filled the gap. But if Moscow can't keep up, even those buyers may start looking elsewhere. That means Russia could lose hundreds of billions in long-term market share it will never claw back. And here's the irony. The very war meant to show Russia's strength may end up shrinking its role in the global economy for good. The world is watching closely, because if Russia tips over, it won't just be a local problem. It'll shake the balance of trade, energy, and power everywhere. But behind the headlines, there's a factor almost no one is talking about, and it could decide whether Russia's economy bends or finally breaks. There's one piece almost nobody is talking about. Not oil, not China, not the battlefield itself, but trust in Russia's currency. If the ruble takes another sharp dive, ordinary Russians will scramble to convert their savings into dollars, euros, and even crypto. That panic could set off a chain reaction inside Russia's fragile financial system. Banks would tighten, lending would freeze, and suddenly, Moscow would be fighting a war not just on the front lines, but inside its own economy. Economists call this a confidence crisis. And once it starts, it's nearly impossible to stop. And guess what? That time is very, very close. Russia's economy has proven tougher than many expected, but cracks are spreading faster than the Kremlin can plaster them. Whether it's oil revenues, China's cooling support, or the ruble's shaky future, the system is more brittle than it looks. If you found this breakdown helpful, hit the like button, drop a comment with your thoughts on where Russia's economy is really headed, and don't forget to subscribe for more videos like this one. As always, I'll see you guys in the next one. Ciao.